High-yield bonds and stocks allay the recent investors' fears. I'll show you how to trade futures or contracts for difference or continuous security on a 4-hour chart as it applies to the S&P 500 recent price action. We will also look at euro, which looks kind of vulnerable, and yen has already broken down versus the dollar, so that's interesting. And gold, do they really ring the bell at the top? It sure feels like it, and as I explained, with the dollar possibly breaking out, gold could come under pressure. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, October 24th, 2025. Don't forget to help promote this channel, make a comment, share, like, ask many questions in the comment sections, or possible requests for analysis. That also works. Let me know if I could help. If you're a subscriber, we have a very busy video separately that's going to be released. We're covering our usual market browse, crude oil, natural gas, ETFs, large cap stocks, but notice there's a lot of what I call speculative securities. Namely, there are several new additions like FuelCell, Apellis Pharmaceuticals, 10 times Genomics, Sano Biosciences, and Tripadvisor. So if you're a subscriber, stay tuned. Looking at S&P 500, let me zoom into the recent price action. So first of all, this giant red candlestick on the 10th of October, so 2 weeks ago basically, completely negated, pretty much within a few days, a couple of weeks really. Now we made new records. So again, this big red candlestick, for which I worried about at the time. I thought maybe this was it. Clearly it wasn't it. And now we made new records. So again, this market is extremely resilient. We are bullish. We are long. In other words, we have bought this market. We started buying it where I'm hovering on 2nd of May of this year, 2025. This was the initial breakout following this freak out in April of this year. And basically we're holding, like for example, QQQ, Nasdaq. I actually bought myself right there on the 8th of May. And it just keeps going. Now we're at new records. I did sell half my position, clearly prematurely, but I'm still holding, so I'm going to remain bullish until proven otherwise. High yield bonds, also known as junk debt or JNK, ticker symbol JNK, made a record on September 23rd. And this was actually one of my concerns because the junk debt made a record 23rd of September, but S&P 500 continued making records, while the junk debt actually kind of moved lower into Friday, October 10th. So that would be like a very mild, small bearish divergence, whereas high yield bonds are moving lower while stocks are moving higher. This has now been negated also because junk debt, I believe, also made a new record. So today 97.76, previous is 97.70. So yes, indeed, high yield bonds have made a new record. So this divergence is now a moot point, and we have a confirmation of the bull market for stocks, because high yield bonds and stocks correlate highly. In other words, they move in the same direction pretty much all the time. This is not the case with things like treasury bonds, so for example TLT, treasury bonds, and you can see that the pattern is completely different from the high yield bonds. Notice totally different. So or even from SPY, S&P 500. So the treasury bonds, especially the long dated ones, have a very different degree of correlation. Let me just show it to you on the weekly time frame. So here is TLT, treasury bonds, and the correlation coefficient, correlation to the S&P 500. You can see it's all over the place. Whereas let's say J and K high yield bonds correlation is very high for S&P 500. So good news again that the high yield bonds made a new record, so that could put our fears of a turnaround for stocks to rest for now. Let's look at S&P 500, but now we're going to look at S&P 500 on a shorter term time frame. So this is for informational purposes only. If you have access to S&P 500 futures, if you have access to S&P 500 contracts for difference, so this security which I'm showcasing here, ticker symbol US 500, it's contract for difference from capital.com. It's not available in the United States, unfortunately, but things like Forex, like for example euro versus US dollar, are available and you can theoretically trade it same way. But let's just look at this S&P 500 on the 4-hour charts and see what the action looked like. It was very telling, actually, very interesting, I thought. So we made a record high on October 8th and then sort of traded sideways until October 10th, when we made two big red candles. So yes, this is a 4-hour chart, and throughout the day basically we had 8 hours worth of trading, and we had two big red candles. What was really interesting is that notice where it stopped. It stopped at this red support resistance line. Again, you can find out more about them by going to the description. But it's really like this happens quite often on multiple occasions where really like, if I'm going to turn them off, can you tell that this level was meaningful? We can look at exponential moving averages, but they were not really meaningful. So whereas when I look at my indicators, you can see that it was very meaningful, because that's where the selling basically ended. Again, remember, this is a 4-hour chart. So what I told at the time, and this was a Friday, October 10th, so what I said is, unless we quickly reverse and jump and get back above the blue line, then very likely we will break below this red support resistance line and most likely continue even lower. Literally on Monday, or actually Sunday evening, because markets open on Sunday evening, we jumped and closed above the blue line. So that was the first indication that most likely this was it. You can see we made really several choppy up and down moves, especially this move right here on the 16th of October, but then immediately reversed. And this was again, almost approaching the records, and then boom, we broke out to a new record. So you can see that you can use my indicators to basically trade things like S&P 500 futures. You can do euro versus US dollar. Theoretically, I don't normally trade this, but yes, you can do something similar. Like for example, you would be shorting euro on close below the red support resistance line. You can see it would have worked quite well here. Okay, so that was something to consider. If you are interested, again, let me know in the comments, and I can explain more about intraday trading. This is daily trading. Each candlestick is a day's worth of activity. Vast majority of my trades, like 99% I would say, are daily, on daily charts, or even weekly. I don't normally trade on weekly, but on daily it's like vast majority of my trades are traded on daily charts. Okay, let's switch gears. Let's first look at the Japanese yen, and I will show you that. So first of all, this is Japanese yen futures. So on TradingView.com, ticker symbol is 6J1 exclamation point. So continuous Japanese yen futures. Until very recently, in fact, there was actually one whipsaw right there on the 31st of July, and then yet another whipsaw right there on the 16th of September. But the latest two signals I think are good. I think yen has reversed indeed, and now is going to be in a downtrend. So it looks like we have, why? Because notice this chart. On this chart we have closed below this red support resistance line, so by definition this will imply a downtrend. This is for Forex securities, for Japanese yen, etc. So Japanese yen has reversed against the dollar. We can also look at USD JPY, which is available to trade, for United States customers. In fact, there was no whipsaws here. If we look on the Japanese yen, you can see there was a whipsaw right there on the 31st of July, and yet another one on the 16th of September. Yet on this chart, USD JPY from Oanda, there was no whipsaws. Okay, there was the Japanese yen was in a downtrend, where I'm hovering since beginning of March of this year, until very recently, until 7th of October. So USD JPY currency pair is currently in favor of US dollar. US dollar on top, the Japanese yen on the bottom. So right now US dollar is gaining versus Japanese yen. This is interesting because up until recently pretty much every single currency under the sun was trading against the dollar was gaining and dollar was losing. And by extension, when I get to gold, I'll show you that the dollar weakness was a boon for gold. Now we're looking at US dollar versus Japanese yen, and US dollar is now winning this battle. This is one of the few currencies. Another one is let me say AUD USD hasn't yet switched, but NZD USD, New Zealand dollar, has indeed switched. So again, in favor of US dollar. I already highlighted this currency pair last week. So let's now look at euro versus US dollar. So clearly right this instant there is no ifs, ands or buts. We are in an uptrend for euro versus US dollar. Okay, we can look at euro futures. So 6E1 exclamation point. Euro futures are also in favor of US dollar. I'm sorry, in favor of euro. Euro is gaining. Now, as I was saying, now we have at least two currencies that are in favor of US dollar, the Japanese yen and New Zealand dollar. Euro is clearly still in favor of, euro. So, can this be a head and shoulders, possibly, maybe, something like that. If it is, then euro will be, euro is vulnerable to correcting action. We will see very soon if my argument has any water in it. But for now, let's look at the dollar. So dollar is like 50% euro. So DXY, the dollar currency index, is quite heavily weighted in favor of euro. And dollar currency index has been in a downtrend right there since March of this year, and it's been going down. In fact, this is a 3-year low on 17th of September. And then I saw this action, especially right there. I saw this action on the 7th of October here. It looks like we saw a small breakout above this yellow support resistance line, but we almost immediately went down below it. And so I wrote here, we can go either way. Basically, we're very much balanced either way. We can go down or we could go up. So far, we have not broken down. In fact, we held this yellow support resistance line, and we're trading above it. So if I was to bet money, I would say that we're going up for the dollar. I would say dollar has most likely bottomed, and it will continue higher. One of the biggest reasons why I think that is the case is, of course, because of the way gold has been acting. So here's gold, and I had no problem obviously buying it. In fact, we've been long gold since at least You see right there, since 2023 January there was opportunities to buy. Anytime we closed above the blue line, so touch the blue line, close above it, we buy and close above it. Notice the last move was just gigantic. It basically more than doubled from about 2000 to about 4, more than doubled, yeah. So if you bought back here, you know, when I was sending alerts back in February 2024, you would have been in very good shape. Latest action, so right there on the 22nd of October, 21st of October, sorry. So big move lower. I'm gonna zoom in here in just a second. And very big move lower towards the yellow, towards the green line. And this is actually a bearish engulfing pattern. So very large candlestick that completely engulfs the real body of the previous candlesticks from October 20th, the 21st of October, completely engulfs this previous candlestick, so clearly bearish engulfing. Next day we had a small follow through, so definitely a confirmed bearish engulfing. The problem with getting terribly bearish right now is this 3 candles from 22nd, 23rd and 24th of October from today. Notice that we tried to pierce through this green support resistance line, but so far have failed. So my guess is, we can look at the 4-hour chart, XAU USD. We can look at the 4-hour chart, and it's obviously looking a little bit different. So on the 4-hour chart, notice we haven't yet touched this blue support resistance line. There's a very good chance we're going to touch it before we can make a decision. Are we going to rally or are we going to continue lower? If we're trading on the 4-hour charts, then we should be thinking about, like for example, this previous action here. Notice breakout above the blue line. We should be thinking about buying once we touch it. This is again a 4-hour chart. We haven't touched it yet. So on daily charts, we're just retesting this green support resistance line. So far, neither the bulls nor the bears really have an upper hand. But once again, if the dollar, if my theory on the dollar is correct, and I think we will be going higher, in other words, euro will be moving lower, then gold will most likely continue lower. And we will again, the corrective action for gold to just get to like normal corrective action is another 10% down towards the blue line. So if we get to like 3,600, I would be considering going long to buy again, unless we just like collapse through this level of around 3,600. But you know, what do you guys think? I think the dollar is going to be moving higher in the next few weeks to a few months, and by extension, gold will maybe it will bounce a little bit, but I'm just not sure it's going to make a new record. It doesn't look like it. It really needs to have some sort of a consolidation period. Gold miners are clearly more volatile, and we had even bigger drop here. So from the all-time high on the 16th of October until a low on the 17th of October, there was a 7% drop, but then the next day there was an even bigger drop, like a almost 10% drop between 20th and 21st of October. Notice that gold miners also led stocks lower, whereas this big drop was on 21st of October. Actually, same thing, never mind, they looked in lockstep. We're below this green support resistance line, so let's just say that I was buying it here back in May of this year. I would be taking profits now. Normally, when we close below the green line, we will be thinking about taking profits. If we continue lower a little bit, not that much, another 9 to 10% or so towards the blue line, which is currently around $65, that would be considered a significantly oversold condition, and we potentially could think about buying at that point. Again, this depends on the dollar, and if dollar continues strongly higher, then I would strongly caution against gold and gold miners. All right, that's it for this week's recap. If you have any questions, once again, please make a comment in the comment section. Even if you put thumbs up in the comment section or like a heart or something, it would make the algorithm think that this is an important video and people want to watch it. So please don't forget to do that. Stay tuned if you're a subscriber. We have quite a bit of various securities to cover. If you're not yet a subscriber, consider signing up by going to the link in the description, MasterChartsTrading.com. Again, I have two products, trading indicators, newsletters, and one combination product, trading indicators and newsletters. I think newsletters will be getting a major upgrade, I would hope very soon. So if you sign up now, I will most likely grandfather you in for the new upgraded product. However, the new upgraded product will feature many new things, like, for example, you will be able to select which stocks to track, and that would be a major upgrade. So the prices most likely for the newsletters will be going up. Trading indicators, for now, I'll keep the prices as is. But the newsletters and the combination product most likely will be going up in price once the new upgraded rollout will happen. If you are a current subscriber, the change in prices will not affect you. So again, yearly plans are much better. Sign up. So trading indicators, these lines on the chart, you can trade pretty much anything under the sun with them on most time frames. Newsletters, again, send out daily alerts and weekly members only videos. And the best deal is to get both trading indicators and newsletters on a yearly subscription, but your monthly subscriptions are also available, and all of the subscription plans come with free 7-day trial. So you can sign up, and if you don't like, you can always cancel. That's it for this week's recap. Please let me know if you have any questions. Thank you for watching. Have another great trading week. Bye-bye.